New listeners, welcome. And for our loyal listeners, welcome back to Take Flight podcast. And the time of recording is Tuesday. What I mean by that, it's the 22nd of the 2nd, 2022. But we'll let that pass and we'll continue into the episode. Just thought I'd give you that sort of random fun fact. And I'm sure and I hope you all made your Tuesday very eventful. So in this episode, we're going to be talking about Peleton. In 2020, when the pandemic kept gym goers at home, Peleton sales soared and its stock was going through the roof. It soared 400%, making it Nasdaq's second top performing stock of 2020 and was considered to be one of 2021's most influential companies. However, like many of its bike users, it had a tough ride as of late. So what's really been going on? In this episode, we'll be discussing where it all went wrong for Peleton. Was the pandemic a blessing or a curse, or was it both? What's next for them? And how can they turn this all around? So make sure you stay tuned to listen to this insightful episode on Peleton, the wild ride.
Take off, take flight with you. For we never fly, but we're flying.
So guys, first of all, before we get into the meat of this topic, I want to do a quick round robin of how everyone is doing. I'll start with you, P. Pab, how you doing?
I'm good. I'm always good. I'm well. Work's good. Business is good. Family's well. Karim's growing. Yeah, nothing to complain about. All good. All good.
Good to hear. That's good. Olu, you looking
Same.
fresh, nice setup.
Blessed and
HD.
highly favored. A few changes happening career-wise. Hopefully I can share some good news in the next few weeks. But yeah, really excited. New challenge in regards to work. Life is good. I'm healthy. Hopefully I get to see Shual and Daniel this week. So that'll be good for us to catch up. It feels like whenever we meet up, he's just never there.
You need this
He
private
just-
jet. I keep saying.
Yeah.
You need to figure out ways to.
He
Yeah,
doesn't
if
want
there's
to.
any, if there's any aviation companies listening to this and you're looking to sponsor Take Flight and provide travel expenses covered, then you know who to call.
Well, for anyone who's watched Tinder Swindler, if anyone who's watched Tinder Swindler, you can ask Simon Levive.
If he could take P on his jet.
yeah.
No, but I'm
And,
good. I'm good. I
That's
can't
good.
complain.
And last but not least, Shua, how are you?
Yeah, I mean, just one quick remark for the listeners who may not be able to see this. Olu, your skin is glowing, bro. I know we were talking about the sponsorships, but the Cocoa Bar, if you're listening to this, we've got another sponsorship opportunity because the skin is glowing.
P's hating at the bottom. He's
I
hating.
just have to say, I'm never hating. I just try to put facts on the table. You're just not as glowing as much as last time. So I don't know what you've done.
Because I'm not using my camera this time. I'm
It's the
using
camera.
just
Okay, cool. It's not you.
it's the camera. It's the skin, obviously, but yeah, the camera is.
Alright, cool.
Wait,
you're
you're not using your camera.
Shout, shea butter, cocoa
Nah,
butter.
because the battery
Maybe a
dies. So I'm
cream.
using the camera on my laptop.
Well, whatever bar you're using, if there's any companies, moisturizing companies who
Vaseline.
want to sponsor us,
Yeah,
we're
get
ready.
us.
But Olu's already
Holla.
ready. But no, on my side, all good. I think actually by the time this episode comes, I'll have hopefully the opportunity to catch up with Daniel and Olu, and also catching up with P because I'm planning a weekend trip to Switzerland again for another ski trip, Olu. So I'm serious about it. It's not a
Ooh.
one time
You down?
thing.
Yo, which weekend?
Yeah, it's already booked.
Wait, by the
It's
time
already aligned.
this episode airs, I would have already gone there and back. It's this weekend.
I'm down. I'm down if you.
I'll share the
We'll
details.
talk about it.
with
We'll
you.
share the
You tell me.
details.
Alright,
I'm
cool.
down.
Alright,
I'm
well-
down this weekend.
If anyone follows either of them on Instagram, stay tuned. And if you see any pictures uploaded on Instagram where Olu is skiing, it happened.
Daniel, how about yourself?
Oh, thanks for asking. I thought no one would care. No, I'm doing good.
Come on.
Since the last time we recorded, I'm back to work from my initial 4 weeks of paternity. So at time of recording, I'm in through a week and 2 days of being back to work. Thoroughly enjoying the new role. Really into the thick of things, and really, finding my feet very fast and having an impact already, which is good. It's really good to be made an impact from day one. It's good to really people have been excited about me joining. Maybe because that's all the work they're going to give me or the impact I'm going to make. But nevertheless, I'm looking forward to it. Yeah, so far so good. Really enjoying the company, and really looking forward to the opportunities that will be coming my way in the coming weeks and months for sure. And
Daniel,
on the personal front,
sound like a pay increase is coming soon.
I mean, that's why Daniel was asking, the questions that he was asking in the group chat, right? There's some big play coming, I can tell.
Facts.
oh.
Go on, sure.
No, I was actually gonna. No, but Daniel, you're going to talk on the personal front very quickly.
On the personal front, family's doing good. Baby's growing. Really enjoying being a dad. Hats off to my wife Melissa. She's been doing an incredible job, especially with me being back to work. So I can't complain. I'm really fortunate and blessed.
I actually thought you were going to say hats off to other dads as well. I thought you were gonna go that direction.
But actually, no, actually,
But what
Pete,
you
that
actually
comment-
said made sense. I was
comment-
actually about to come in and smile and say, "Oh, thanks, Daniel." It didn't come. It didn't come. Go ahead,
No,
Sean.
actually,
Go ahead.
no, just Pete. That is the perfect window for what I was going to ask, because I was going to ask Daniel. Daniel, how does it feel like being a man of integrity and going back to work after 4 weeks?
When I read that story, I said, "Yeah, is that what he's on?"
P, why don't you
Is that the
explain
kind
that
of
to
shots
the?
Daniel's
why don't
firing?
you-
For
Why don't-
context,
yeah, sure.
let's set some context. So a few weeks ago on Instagram, I was just sharing, of course, that our son had arrived and my company offers 18 weeks paternity, and I put in like at the bottom saying, as a man of integrity, I didn't take up the full 18 weeks up front. So P slides into my DM like, is it? And for those who don't know, so when Pab had his son, Pab took off 5 months of paternity, so the 18 weeks, let's say, and so he was like, what? So I'm not a man of integrity, basically trying to say I was firing shots. But I had to explain to him,
subs, Daniel, subs.
Mate, that one.
But I had to explain what I meant was what I was explaining was, because I started the company, it wouldn't be fair for me to take 5 months initially from just I start 1 week and I disappear for 5 months. That's what I meant. So that was the context in what I meant, rather than saying,
he wasn't even thinking about, who's taking 18 weeks? Let me maybe word this a little bit different. He just went bam, send.
And I think when Daniel wrote integrity, it was all in caps as well, right?
The whole thing was in caps. Don't try, sure, don't try. The whole thing was in caps. The whole text was in caps.
The only thing you were missing was tagging Pabilo.
But funny we say that. I think there was I can't remember exactly who, but there was a I don't know if you call it prolific, but there was a CEO that came out and said any father that takes off paternity leave for 3 months is basically not a real man, or can't be considered to be like a real business.
I think it was Joe Rogan. They were doing like he came out and said like any guy with any that's running any purposeful business or has any purpose would never take that amount of time off. Was what he was trying to insinuate. But yeah, Chamath, I think some other people also came in and also did mention it as well.
Just to do a very quick clarification and fact check. It actually wasn't Joe Rogan. It was an American guy. But it was a guy who's in the I think the VC space, but it wasn't Joe Rogan.
I think he mentioned on his podcast.
I think he might have spoken about it, but it was the VC guy that actually brought it up.
VC guy first mentioned it, and then Joe Rogan agreed, or he said you can understand that as well. Chamath also, I think, came out and said on his podcast as well, and some other people.
I think in the end, it came down to, first of all, it depends on the actual father himself, but it also, I think they were leaning to the VC person was speaking from a standpoint. If you hold a very important role in a company, especially in a startup, you can't then just leave for 6 months because your startup and the business and associates need you. So I think it depends also on the position that you're playing within this company.
For sure.
Yeah.
So if you're not playing a good position, you can take the 5 months straight.
Let's just say I've engineered certain moves to allow for certain spaces. You know what I'm saying?
You're not helping yourself out, P.
That's what I was saying.
Okay, so let's move on to today's topic.
Smart work.
And the topic is Peleton, the wild ride. And why I thought it would be quite interesting to bring this conversation to the podcast and to our listeners is Peloton's I think their profile has certainly grown over the last 2 years. for those who may not even have a product. The Peleton product. So for those who don't know, Peleton is a product where they have a Peleton bike and also a Peleton treadmill. They also have a digital subscription where you can do on-demand classes and also do scheduled classes. And you can also do with friends, high five people. It creates a sense of community. You have different instructors with different music playing depending on your appetite for music. You can select a class that may be playing R&B, hip hop, dance, trance, or whatever it may be, just to get your juices flowing. But why I brought this topic to the podcast was it's really been on turbulent times as of late, and we all know that during the 2020, and as I alluded to in the beginning of the episode, its stock price itself soared. Stock price went up by 400%, being one of Nasdaq's best performing stocks, best performing companies. But as of late, it's had a lot of negative or bad press. The share price has fluctuated. There's been some negative media attention. There's also been a change in management. And I thought it would be interesting just to dive a little deeper into some of those points and to see where we think what the future holds for Peleton. So just to provide some context and some information, as of February the 8th, Peleton went through and changed its CEO. So John Foley, who was the founder of Peleton, left his position as CEO, and Barry McCarthy was unveiled as the new chief executive. However, Foley stayed on as an executive chair. And prior to McCarthy coming in as CEO, there was a particular investor who was calling for Peleton to be sold and for Foley to be fired, just because of the performance of how Peleton was and the fact that it lost $40 billion worth of shareholders' money in a short space of time. Additionally, the media attention that it's had in the last couple of years hasn't been so good. I think it was in 2020 or 2021, I can't remember, but there was a tragic death of a child who got caught in the Peleton tread, which called for Peleton treads to be recalled and additional disclaimers and safety announcements made by every instructor before every class. In December 2021, HBO's reboot of Sex and the City caused the price of Peleton to drop 11%, which is the lowest it has over the past year. And just to provide what happened in that episode, so one of the characters, I don't know, I don't watch Sex and the City, I don't know the names. I know Sarah Jane or whatever the real name is.
Mr. Big.
Whatever. So Mr. Big in the episode, thanks, Holu. I think he was being praised for his post-pandemic body. And he was saying, oh, I have a wonderful trainer. She's from Barcelona. And saying that he enjoys the rides and the workouts. And he was preparing for his 1,000th ride. And for anyone who's used to Peleton, they like to give you achievements and, shout outs in the classes when you reach your 50th ride, 100th ride, etc. And he was approaching his 1,000th ride. And on his 1,000th ride, he actually had a heart attack and died. Of course, this is fiction. This isn't reality show. This isn't reality, but it's fiction. But just because of that event, Peloton's price dropped 11%. They tried to limit damage control, and they got the character that played Mr. Big to do an advert for Peleton. Only for days later, it was announced he was being accused of sexual harassment or sexual assault. They then had to pull that advert. So it was like they're just digging a bigger hole for themselves. In addition to that, I won't actually, let me stop there. I've kind of provided the context. There are other things that have happened, but I want to ask from your guys' view, from your sort of back, your digging around this topic. Where did it all go wrong for Peleton? Was the pandemic a blessing and a curse? Was it both, or what do you think? I have my views, but I want to sort of pause on my thoughts for now and maybe gather your thoughts on this.
There's 4 people on this podcast, so I guess we can ask the question. Does anyone own a Peleton?
I have a digital subscription,
Okay.
but I don't have a
you don't have
Peleton
the
tread
hardware.
or Peleton bike.
You
No.
don't have the bike, so you got a.
So what do you get with the subscription without the hardware?
So there's quite a hack. So for example, if you had a bike, a decent quality bike, you could use your iPad, mount it on, do the digital subscription, still do the same class, but on a cheaper bike. Similarly with a treadmill, you could go to
But
a
it
gym.
won't give. Will it give you the? I guess there's an element of it that it doesn't give you the community element. It doesn't track sort of the digital element of the bike in terms of your
It
speed, how you're doing in
no,
terms of the
yeah.
class?
So yeah, I guess it doesn't track that element. But if you, for example, had a wearable device like an Apple Watch, you could still maybe do so. It maybe wouldn't be as accurate as the bike, but you could still track your performance and effort in some way, shape, or form. Similarly, with a treadmill, you could put the iPad on and then do one of the workouts and use the same speeds that they offer and the same same incline. But also the digital app also allows you to do things like yoga, Pilates, any high intensity workouts, weights workouts, etc. So I guess there's an added benefit for doing a digital subscription, which you can also use if you like to travel a lot, and you can still do workouts. Whereas if you have the hardware, you're limited to that space or wherever it
Got
lives.
it. Makes sense. I think for me, look, I think it started from the business, right? I feel like Peloton is a niche product. And what I mean about that is how big can the market really get, right? It's like we mentioned, it's really a web connected hardware. It could be a bike, treadmill, which is connected to these live classes, which you're allowed to create these particular communities. I think firstly, you look at the desire, right? How many people are really going to desire to purchase a bike for over £2,000, right? That's the first element. So by having that niche, you're already reducing your market share. Also, the space element of it. I think during the lockdown, a lot of people were at home, but there's also a big restriction I know, in a lot of central cities such as London, New York, where you might not have the space for that particular bike. And then lastly is really around the affordability. I think the pandemic was a blessing and also, I would say, the main reason why Peloton failed. If we look at how much they increased their market capital during that period of time, I believe in the beginning of late of 2019, it was a 7 billion, 8 billion company, right? And by the end of the sort of late 2020, it was a 50 billion company, right? So you're going to ask the question, what changed in that period of time? It was the pandemic, right? Gyms were closed, people were at home. But like so many companies which people classed as pandemic companies, we were never going to stay locked up for the foreseeable future, right? Everyone knew gyms were closed for a period of time. As soon as gyms start to open, people will start working out back in the gym. I think that was the common sense assumption that you would have made. I think what the business did is, because they had such a high demand, they started to spend quite recklessly. And what I mean about that is they started to see a lot of orders, a lot of revenue come out. And to be able to meet that demand, they started to say, okay, we need more factories, more delivery, more money on logistics, and became so base cost or expense heavy that when that demand dropped, it just did not become a viable company, right? And I think that's one of the curses of growing too quick, right? It increased by such a large percentage. I think it increased by 172% sort of sales in such a short period of time, that you've got to ask yourself, is this scalable and is this realistic, right? I think Peloton was a great trade, right? For people that did invest in that business. But from history's sake, anything that goes up that quickly typically bursts at some period of time. You could look at it through cryptocurrency, you could look at it through other investments. Whenever there's a rapid spike over a period of time, it typically declines afterwards. So just to go back to your initial question, I think the biggest sort of failing or where it started was they weren't able to scale up their business in a sustainable way when they saw the increase during the pandemic. I would say that was their biggest failing. And I don't believe they had the right executive team. If we'll go in there, right? I think the leadership wasn't the best. He hired a lot of family, friends, partners in a lot of
And his
senior
wife.
roles. His wife, right, was in charge of one of the vice presidents. And yeah, that's really where the failing lies. It would be good to hear what the other guys think.
Joel, over to you.
So it's interesting. Going into it, I had this perception of Peloton because of what we hear in the media. And that perception was almost quite, I mean, it was a negative perception. I thought it's probably a poorly run business. The product just sounds like it's a bit clunky. But then digging into it, it made me change my perspective. And I'll explain in a little bit why. But actually, Daniel, I had a question for you first to throw it back a little bit at you, because you're the only person in our group that has some type of Peloton product. In this case, you have the subscription. As a consumer to that product, how has that experience been?
I'll be honest with you. I had the product because it was free for 6 months. And it was during the pandemic. It was actually my healthcare provider, Vitality, were offering a free 6-month digital subscription if you signed up before December 2020, which I did. And I actually extended it for a bit, but I've paused it momentarily. But I actually found it a good experience, but also found it was a good motivator, especially when I'm someone who likes to work out with music, but it just gave me different variety. What I wasn't having to think of the tracks. It also added a bit more motivation. I wasn't doing scheduled classes. So what a scheduled class is where it's a live class where your trainer's there at the same time. You have other people virtually or in the actual Peloton room, which is another thing actually would add is pre-pandemic, the Peloton classes were in person. So you'd go in, you could use a Peloton tread like you would in a gym, say a spin cycle class, and you'll do it, log into your account, and you will cycle for whoever signed up. And of course, you'll have people who are doing it remotely. But I actually thought it was quite nice just to have. I found an instructor which I liked. I liked Jess Sims. She was good. She had decent music, good motivating, made it good intensity, and also a guy called Adrian. Good music again, was made it quite enjoyable. And I knew what to expect from their class, that it was going to push me. It wasn't just a low impact, low intensity. It was actually one that's going to make me sweat, make me pause, make me break. So yeah, I found it as a good experience digitally. Just for those who are unaware, a monthly digital subscription is $39. No, sorry, it was around £12, I think. But in terms of the pandemic, in the US, a monthly subscription was $39, and that more than doubled to 1.7 million. And signups for its cheaper digital fitness during the pandemic itself. So it jumped tenfold in a very short space of time.
So I love to hear that, Daniel, because actually through this research, I probably am more inclined to try the Peloton machine. And I think going back to the question, what was interesting for me is your experience. You got it for free. You've mentioned that you've paused it, but you haven't cancelled it. So clearly there's some value in that subscription that you've enjoyed. And I know Olu mentioned that it's quite a niche market, but when I was digging into it, and I think the market that they're looking for, so if we start with the market overall, they are trying to target the global wellness spending market, which at the moment, the total addressable market is $4.2 trillion. And specifically fitness, which is the part that Peloton is in, is $600 billion. And this is globally. So let's assume that's the overall market. Now, at the moment today, in the US alone, there are 74 million people who go to the gyms just in the United States. So if you assume that you were to get a portion of that instead of going to the gym, they would be up for signing up for this membership where they can train anywhere that they want, or they have this device as well at home that they can train together with. There is an opportunity there. Just in the US alone, 74 million people, and then globally $600 billion in terms of the market size. Now, at the moment, Peloton has only focused on US, Canada, UK, Germany, and Australia. They're kind of the main existing markets. And just based on those 5 markets alone, they've been able to get just over 2 million subscribers. And that piece is an interesting piece because the subscribers makes up about 25% of their business today, and then the 75% is driven by the actual bike sales, the machine sales. And specifically just on the subscriber base of that 2 million, what's great about that is that it's a recurring revenue stream, similar to Netflix, similar to Disney Plus, and the margin on that is very high because an additional subscriber on software, the margin is a lot better versus a hardware device. I think at the moment their churn, so specifically for subscribers, for subscriptions, especially in the tech space, they look at the churn in terms of how many people drop off. And I think using Daniel as an example as well, the Peleton subscription churn rate is very low compared to other similar services that are being offered. So I think combined, that subscription business puts a strong position for them, 2 million out of potentially 70 million. And that's just in the US. And I think the hardware piece, what was interesting about the hardware, and I listened to this, there's a great podcast called How I Built This. It's a guy called Guy Raz that does it, and he interviews founders. And there was an interview with John Foley, who's the CEO, and he talked about the pricing of the bike. And at the beginning, when they priced it at around $1,500. And at that point, they actually couldn't sell that many. But then when they increased it to 2,500, they started to get more sales. And then in terms of the selling as well, they weren't getting so much success selling it online, but having specific stores where people could jump on the bike, ride on it in affluent areas where there was retail space also generated some sales as well. So I think all of those components actually made me think this is a great business, but the piece where they messed up is really on the execution and the operational piece, which maybe we can talk about in more detail later on. But I think going back to
some questions
gonna-
on what you just mentioned.
Mm.
So I think you started about sort of their market, the market that they were going after. I think one of the big things, Peloton was priced as a growth business,
Mhm.
right? A rapid growth business. And initially they said that they wanted around 45 million subscribers was what they were looking in the US, right? And even starting with that number, where the majority of those people are going to be purchasing a hardware, because Peloton software is, especially on the device, is closed. Is a closed software. Is only on the devices that you can. On the devices, it doesn't have an iPad. It's got like a Peloton software and device on them. So for me, that initial price of, or saying that they're going to go through for 45 million of the market share, I don't just believe that's realistic, because you're facing, like I mentioned before, how many people want to purchase like an exercise bike or a treadmill at home? How many people have the space? And then also, how many people can even afford to buy this in their home? By having those different barriers, you can't just look at that total market of how many people in the wellness space, because so many of them are cut off based on the fact that they can't afford that sort of bike. And then I think, going back to sort of what you're talking about, subscription, I do believe that their best element and where they should focus most of their time is on the subscription and on the software. The problem, and I'm not sure Daniel's the only one that's obviously used it, is due to the fact that their software and their device and is very closed, is a closed service. You weren't able to connect it to other bikes. You weren't able to connect it to other equipments, which then the big Peloton element of it is that community element, right? I've gone to the gym before, and I've gone to one of those exercise size classes where you have your name on the board, and it's like that competition, that competitive element of that. And for me, I personally, and this is obviously my opinion, is it a £7 billion dollar company? Maybe so, but I don't think it should have ever got to the point of the 50 million. And maybe that's what we're just seeing right now, is a revaluation and people realizing that, okay, the pandemic, same that we've seen with Zoom and some other companies, the pandemic drove up a lot of demand, and really this is only a 10 billion company, which is not a bad thing, right? It's just, is it a 50 million, 100 million, 100 billion company? I don't particularly think so, based on the niche element of the product.
Pete, you were going to say something.
Yeah, I just wanted to add, actually, because I think everybody's mentioning some great points and some really good insights. I believe I wanted to just start off by saying I think the product is fantastic. The business is questionable. It's very expensive to run, and we're seeing that now as things are starting to unfold. One of the things that I noticed when listening to some of the users that actually have Peloton bikes is how they've done a really good job in creating a movement and personalizing these sessions. If I kind of liken that to what we're doing in the pharma side, in the pharmaceutical industry, we're moving to a model whereby we're trying to personalize our content with doctors. So I saw power in what they're trying to do from that standpoint. And I think, Daniel, you even mentioned this, right? There are some instructors that you know by name. and that is pulling you towards keeping the subscription model and things of that nature. So I think this whole topic is like the rise and fall of the Peleton bike, and some of these pieces here are, to Joel's point, make it a good product. Business side of things is different. One challenge maybe that I would just perhaps add, and we can circle back. I think one of the biggest things, you've all kind of touched upon it, but it's just underestimating how the demand was going to work during this period. So there was kind of this assumption that when I believe
Oh, PP, you're getting ahead of yourself here. You're getting ahead of yourself. We're gonna get into that.
Okay.
No, yeah, it might be a good segue. So no, go ahead.
Do you want to dive into it now, or do you want to?
No, we can dive into it.
No, I think when we look at the big, one of the challenges that they're facing today is not forecasting the demand properly. So I've got the impression that during the pandemic, they were kind of the only ones operating in this space and kind of the main known brand. And there was kind of this assumption that this is going to continue. And I think, Ollie, you mentioned this in your opening speech, that it's silly to assume that this will continue. In addition to that, you've then got competitors coming into the space. So and they're competing with live studio gym sessions, because now people are going to go in person to work out again, premium gym memberships. And then you've got other companies like Mirror, Tonal, who have kind of replicated some of the products. So now the Peleton bike is actually not the only product in its form. So I think it's what I'm picking up is that they've underestimated all of these pieces, the competition, the demand, and it's all kind of unfolding at the same time, which is leading to some of the challenges.
No, I definitely agree, and I think Peloton, for what it's worth, was like a name, was like a brand. It's like, yeah, I have a Peloton. You felt like you carried some sort of prestige, some status, that you could afford a £2,500 bike or a £2,000 treadmill. It's like, oh wow. But similar to Ollie's point, as you mentioned at the beginning, it's a niche product, because before you even buy the product, you have to like fitness, and when you like fitness, you need to have enough space. If you have enough space, you then need to be able to afford it. Mm-hmm. And then once you can afford it, you have to want to buy it. So really, which type of the market are you going after? You go into the ones that can say, yeah, I can afford a Peloton. I can afford this bike. I have enough space in my house. And I'll be real with you. I saw one guy set up on Instagram after I was following one of the instructors, and he had it nice. He had one big like cinema screen. He had 2 treadmills and 2 bikes. Because the thing is, if you've got a spouse partner or whatever you're trying to work out with, if you've got one bike, only one of you can work out at a time. You can't compete with one another. So you then have to buy 2 products. So if I want to now work out with Melissa at the same time, rather than say, oh, it's going to be a 2-hour, we have to wait for 2 hours, so I get an hour, you get an hour. We have to buy 2 products, so we do 2 hours in 1 hour. But he had a good setup. I'll give you that. It was nice.
Daniel, just to what you're speaking today, and I'm going to tie it in with what she was mentioning, because I think you've done a great job in showing us the pie that they can go after. But when you look at the marketing strategy and what they've done so far, because this is something they're going to have to think about moving forward, is they've only really marketed to high-end users or customers. If you look at the advertisement, they've had pushback on the fact that they're only market, like the Peleton bike is in state-of-the-art type of apartments, expensive homes. So you spoke about that opportunity pie, but it's a lot smaller if they're only going after people that can actually afford the bike. But it's not even afford the bike. It's almost like you can afford it, but also there's a level of affluence as well. So it's Daniel, what you just spoke about now, this person clearly has got a lot of resources to set up it in such a way. So the question now is, how do you basically work on the marketing to widen, right, your customer base? Because right now it very much fits those who are in that affluent sense.
Yeah, yes and no. But the great thing, what the pandemic allowed Peloton to do was, with the issuance of stimulus checks, it meant that people had an extra $2,000 easily. So it's like, okay, I've got $2,000 in my pocket. I'm now going to buy something that I maybe couldn't have afforded before and just blow it. Really and truly, I'm locked up. What can I spend the money on? What can I spend a stimulus check on? So Peloton were quite clever in what they did. So back, zooming out slightly. So at the beginning, they went from having too little stock to having too much stock. Mm-hmm. And as Ollie was saying, let's put it this way. They got like a kid in the candy store. They got so excited. Yeah, we're going to get another factory. We're going to get more delivery drivers. We're going to do all of this. But they weren't thinking about long-term, when this growth, or even if there was market saturation, what happens when it dries up? And initially there was a long lead time to receive a Peloton bike. I think it was about 6 weeks or so, 4 weeks, and then it
got
turned
up
down to a week. Then
14 weeks.
14 weeks, yeah.
Yeah, at one point, yeah.
Then the turnaround time was like an hour. You could order it now, and then it'll be at your front door in an hour. So clearly they managed that and got that right. But what happened is, as even when people were returning them or there was a problem with the bike, they wouldn't fix it. They'd just give them a new one. That's how much they were getting in their warehouses. And when they started to realize that, okay, their problem was keeping up with demand, soon it was struggling to keep up with the pace of investors' expectations. So to feed the beast, they said the company needed to continue showing growth. And because the growth of the company began to drink its own Kool-Aid, it believed it would last forever. But the thing is, that growth slowed down. Stock was still high. They were quite clever in the fact of they then implemented a strategy where we're going to cut the cost of the bike by 20%, which would now attract those who maybe had thought about it, but it was the barrier to entry was the price. Thought, okay, I can now buy it. And it worked quite well because sales spiked, it increased when they cut the cost of the bike by 20%. And it was tremendously successful. But I think where some of those profits may have been eaten was in the advertisements. But nevertheless, it worked. And it showed investors that sales growth was going well, but then it slowed down. And that's when the stock price began to tank. And that's when there was some sort of internal documentation which said we're going to need to halt production of the bikes for about 6 weeks or so. And when that leaked, that's when people were then calling, investors were calling for John Foley to be fired, for Peloton to be sold, because clearly there was something that was going on internally that they were just getting too excited, trigger happy. Let's order all of this, let's ramp up production. But really and truly, like Oli said earlier, when we are allowed out again, when you think about it, your product isn't COVID proof. Your product is hardware. It's not software. And I would liken that to Zoom. So Zoom, of course, we all know during the pandemic, it shot up, the use went high. And of course, they, maybe got some more developers to handle traffic, but there wasn't a physical product where they couldn't necessarily forecast or have an issue with forecasting. So Zoom's problems weren't the same as Peloton. Yes, it increased, but their strategy could be slightly different. You can hire developers on a contract basis. You can do fixed term contracts and so on and so forth. But with a product, once you've manufactured it, you need to sell it. Otherwise, you're just sitting on dead stock. Yeah. So I think that's where,
and especially if you're building, and especially if you're investing in 400, 500 million on building factories as well, to manufacture more, which is going to have an impact on your capex, etc. And for sure. And then we're gonna go on.
Just quickly on that one, Dan. Although they took the action to cut prices, because I think even one subscription went from $39 to $14. So that drives top line. But because they've got high fixed costs and the business model is super expensive, the profits are still compromised. So in the end, it's not like it's a positive picture all round. And investors obviously saw this from top to bottom. So it's
not positive all round, but it was better.
Especially when the growth drops down, because I think a lot of growth companies, right? People don't really worry about the cash and they don't really worry about the net profit in the early days. What you want to see is what is the multiple on your orders and sales, right? The top line is what people start to look at. But the moment that stops or slows down, people then start to say, okay, how profitable are you, right? Because it's the same thing that's going on with like Netflix and some other companies as well. It's like, as soon as we start to see a certain slowdown in your top line, revenue orders, we then start to look at how profitable you are, which is why now that they've got the new CEO, and I'm not sure, Daniel, we switching to like what we expect next, or do you want to?
Yeah, I think we can transition to, what's next for them and how can they potentially turn this around. We all know that they haven't sold the business, but, what do you think?
And I think the first step is they just need to manage their cost. And we've seen some new announcements with the new CEO, right, coming out where it says the factory that we said we were going to build, that's scrapped, that's cancelled, right? We've seen it with restructuring headcount wise. So they need to start to become as lean as possible. and it's the tough decisions that you need to make. But I was thinking about this from a point of view of, if I was in the position of the previous CEO, right, what would I have done at that particular moment? Because I'm seeing crazy amount of demand, low lead time. I probably would have tried to optimize and gain as much market share as possible because there's such a high demand. The only thing I would have probably done differently was not to make them sort of fixed sort of cost. I would have outsourced contractors, make it as lean as possible that when the demand stops, you can stop paying that third party. I probably would outsource it versus trying to build my own factory. I think they moved to like a new office in New York or somewhere like that, some prime real estate. I would have tried to stay as lean as possible and just have different third party levers that I can increase and decrease based on demand. But yeah, I think the first thing they need to do is focus on cutting their cost. I think second thing they need to do, which I think Shawal mentioned, which I really liked about their business plan, is to focus more on their software. And I think the attractive part of their software is the fact that it's a reoccurring revenue. So they need to figure out how do they get more people subscribed. I think with their Peleton device right now is closed software, so you can't add other applications there. This could be their opportunity to try and create some sort of fitness ecosystem. So you can let third-party people create applications which can be put onto the Peloton, similar to like an iPhone, right? When they created the App Store, they created their own sort of App Store ecosystem. They could do this something similar for fitness. I think because of the fact that they've been able to build such a large community and brand, they can also look to partner with some of the sort of apparel retails like Adidas, potentially Nike. And that could be a partnership where they can have fitness, their brand on retail items, jumpers, tracksuit bottoms, trainers, etc. That could be a whole different market that they move to. Yeah, I think those would be sort of my initial sort of plays if I was thinking about next steps.
Yeah, maybe I can come in and I can piggyback a bit on Oli. I think so I think also with this discussion, I think we're probably all in agreement that it's a great product, but the operational side of the business hasn't been great. And I think this business is still, in the grand scheme of things, quite a young business as well. It's only been around 8 to 10 years, and to be already in the
2012.
billion plus categories, I think is a remarkable achievement alone. I think just building on that, and maybe things that they can be better. I know we were discussing a bit about the price and potentially reducing the price. I actually think the challenge that they did, or the challenge that they had, is they weren't clear on what their go-to market strategy was, because they started off at the high price point and then they weren't sure and they reduced. Whereas, for example, yes, the price is high and you may not be able to access all the market, but there was a period of time when iPhone for $1,000 would have seemed crazy, but now a lot of people have the iPhone because they stuck to it. It's a luxury product. They knew the service that they were offering and they were clear on the market that they were targeting. Now, for Peloton to start off at $2,000, reduce down to $1,000, that is just inconsistent. And for a business, that's difficult to plan. The subscription to start at $39 to reduce to $14, again, I think it speaks a lot about the inconsistency in their strategy. And probably if they stuck with one, they may have had more success, but who knows? But this is something I think the new CEO is clarifying with regards to the price. I think the demand piece with any hardware device is impossible to plan. And I think, Olu, you mentioned the new CEO has come in and actually they've decided that they've already created enough Pelotons to last them for the foreseeable future, how long that is. But essentially means we built too many and we don't need to make any more for quite a while. That in itself, I think, sends a signal that they can produce, but they produce too much, and probably they need to get rid of the stock. And that's something that I guess the CEO will focus on as well. And probably the last point I just wanted to mention regarding the cost discipline, and this was really interesting reading about this. So if you look at the SG&A expenses for Peloton, and you look at the employee growth, as they are a startup, you can imagine that employee growth continues to increase a lot. But the SG&A costs have nearly tripled in the last few years. And specifically, just to give a number with regards to the number of employees that they have, if you look at revenue per employee for Peloton, it's at $470,000, right? Now, if you compare that to other subscription businesses, for example, Netflix, for every employee that they have is generating $2.9 million. Spotify, for every employee that they have, has $2.4 million revenue. And Peloton, just to recap again, per employee has $470,000 worth of revenue. So that probably shows that they've hired too quickly. The top line hasn't increased, I think, speaking a bit to Olu's point. But these are all things that operationally, if they sort out, they can get the business back on track. Is it going to be a $50 billion business again? Probably, I'm not sure. That's quite a stretch, but it can probably increase to from where it is today. Just the last comment that I would make, just regarding the CEO as well, who's come in. This is a guy who's got a proven track record as a CFO in Spotify and the CFO of Netflix. And he's a guy who, in his career, from what I've read, has always been the adult in the room almost around all these tech entrepreneurs who want to grow the business massively. So you have a guy like that who's come in, who can clean up shop, get everything lean to then grow again. I think it's actually an exciting time. Am I going to invest in this company? Nah.
You're not going to buy the dip. You're not going to buy the dip. Siobhan, no. Siobhan, your last point that you mentioned, I thought that was really interesting. The fact that he was previously a CFO, so he's a numbers person and someone that's most likely more disciplined than the potential visionary who's like, spend, build. I have this vision. It's probably what they needed.
But on that, just a quick one. I don't know if you could get the top line growing through optimizing spend. You need to eventually invest to grow the top line, right? So I don't know if the right balance is cutting costs all the time. Probably he needs to cut costs to then invest in the future.
So I don't believe the issue. So the reason why they're cutting costs, I agree with you. You need to invest to be able to increase your top line. But I think the issue is the scale or the speed in which you invest, right? And that was the issue with Peloton. It wasn't the fact that, and the investment is not on innovation, right? We're not talking about R&D spend, which is potentially going to drive innovation, potentially new product lines, which will increase the top line. We're talking about, hey, how do we fund this particular plant factory, right? Someone with finance background would say, hey, we don't want this on our book because it's going to have a capex and depreciate this amount of time. Instead of us building this nice one, maybe let's outsource it. Like, those are different, I think, conversations, but I totally agree. You need to invest definitely to grow your top line.
The only thing I added, and you guys have added some great points, is I think what they need to figure out, double down on, and master is their marketing plan. So one of the things I was picking up from the research was they didn't necessarily market aggressively enough when there was no competition in the market. Now you have other competitors in the space. What is your message? Is it niche customers that live in penthouse suites that are in rich homes, or are you actually trying to cater for more people? So I think for me, it would be you need to really heavily invest in your marketing. The product is there. More people need to understand it, and feel that they can actually buy into the brand and the movement.
Maybe one day we should all actually buy Pelotons and expense it to the Take Flight podcast bank account.
What I would say is, in terms of, I think Foley, it seems he got overexcited, and I think he's quite an ostentatious character, to the fact that on one of the calls he said this can be one of the first, one of the few 1 trillion companies in the next 15 years. The shareholders told him, don't say that again. They said, don't say that again. Just like keep your mouth shut. And I think at the beginning, before Peloton really took off, he went to Soul Cycle and he went to Flywheels classes, and neither of them were interested. So Soul Cycle is like a spin class where they do sort of Peloton in person. And he also went to 400 institutional investors, which he toured during Peloton's first 3 years. And no one was really interested in this product. No one really saw the vision. So when he finally hacked together a bit of money for a bike for a crowdfunding campaign in 2013 on Kickstarter, only 178 people backed this, and most of them were friends. So it took thousands of pitches for him to angel investors to raise 10 million needed to produce Peloton's first bikes and to demonstrate them in an upscale New Jersey mall. But once people experienced that vision, Peloton took off, and by 2019 it was making almost 1 billion in annual revenue. And I think because he saw the vision, of course he bought into it, but because of the challenges he faced early on, he thought he got really excited about the growth and the explosive growth that Peloton had. Even shareholders were quite annoyed the fact that buying a $55 million home in upstate New York and how he's spending money, you know, reckless. It's like
Oh, is that
this
what he
guy
done?
was out of yeah, out of control. So you know, I think people started to question, you know, what he was doing in his private life and his spending with, you know, the success of Peloton. But similar to what Olu said, I think with their hardware, with Peloton, the actual bike and the treadmill, where it's got the inbuilt screen, when you allow other third-party applications, if you allow something like Apple, who announced their Fitness Plus 2 years ago, allow that to integrate on Peloton, allow other apps to integrate onto Peloton, I think you can see maybe more people using it. But they're also doing a strategy, which actually today, coincidentally, from one of my insurers, I got a notification to say, if you buy a Peloton bike, you can actually get rewarded on a monthly basis, depending on how many times you work out or do a class. So that can actually help drive revenue, because I think most people now, similar to the iPhone analogy, when it first came out, it wasn't the £1,000 price point it is now. But let's just say it's £1,000 at the beginning. People don't necessarily want to fork out £1,000 to buy a phone. People wouldn't mind going through a contract route to say, okay, I'm going to go with Vodafone. I'm going to pay monthly for it. So rather than me saying, okay, I've got £2,500 to spend on a bike, how about if I go with my insurer, where I can pay monthly for the bike, I can get rewarded depending on how many times I use it. That could also help the sales and sustain growth over a long period of time. I think they've done the right thing to, well, whether he walked, fired, or whatever, get rid of John Foley. They may need to get rid of him as executive chair. But anyway, they've got a new CEO who I think might have to win over the shareholders, but I think he could do a good job given his track record. But it'll be very interesting to see what sort of model they approach. I think if they consider their product to be premium, they need to stay away from doing sales. When have you ever seen Apple do a sale? You haven't. The price stays the same from January to December. You might get gifts.
Unless you're getting a
Anything
discount
it goes up.
from certain
Yeah,
people.
yeah,
Shout
yeah,
out
yeah.
to those
Yeah,
people.
yeah. Unless you get a discount from like friends of friends or someone who works there, nothing. But the fact is, Apple believe in their product. The price point stays the same. It only goes up. It never comes down. So Peloton need to be consistent with their price point. Find a price that works well. Believe your product and stick to it.
Just one last
Yeah.
reflection as I was listening to you speak, Daniel. You know what's interesting? His downfall could have literally been not knowing how to hire properly and put the right people around him. Because from what he's done up till now to where he's got the business, he's done incredibly well. Since 2012, I mean,
But
he
no,
himself.
because they're actually worse off now than they were pre-pandemic.
No, but in terms
No,
of
I mean,
like
like,
from idea,
because of their expenses, yeah.
product
Yeah.
and selling, and I
Okay.
think his ability to keep going, his ability to pitch so many times and not receive any funding, and eventually get the funding and get it to this stage. So he himself has that tenacity to see it over the line. But then I think it sounds like he wasn't a good picker, right, with the team he has around him. Because if he had some other guys around him that necessarily weren't so much family and friends, they could have perhaps said, pay attention to demand, right? Think about inflation. We've got, you know, supply chain issues coming up and all of the challenges that we've mentioned. So it's yeah, it's a
No,
case of
you make a good point. You make a good point, because he did build a good product. It did have rapid growth thanks to the pandemic, or not. There was still growth, and I think also from an investor point of view, if I was an investor and I see 400% growth, and I start to see it's decline or fall, you're kind of being selfish, because you've been successful because of the pandemic, and because it's falling, you're thinking, well, I want to see sustained growth. I want to see 400x. I want to see that year on year. So I think from an investor point of view, you have to also really think objectively. Okay, it's your money, but really and truly, was this growth sustainable?
Just another point. Ray Dalio has this incredible question to
We
reflect
don't
on.
do plugs on this podcast unless they're paid.
No, it's not.
Yeah, shout out Ray Dalio. He's paying us.
this the CEO John, one of the questions he could have asked himself is, how do I know I'm right? Right. And that literally, one of the things I'm actually taking from this as well is understanding how to have the right people around you to make those decisions collectively. I almost start to wonder, was he a good listener, right? Or was he just pretty much tunnel vision in what he wanted to achieve? Those small tweaks from a people standpoint could have changed a lot. He could have still perhaps been in a position today. So yeah, if you're bullish on your product, which you should be, and you believe in it so much, I think the question is, how do you know you're right? And that starts to you can look at things in a different way.
Maybe then to build, because it's building really on Pabilo's reflections about putting the right people in place. I think when I was looking at this, one thing that came to my mind is he started this business in 2012, 2013. At one stage, this business was worth almost $50 billion. Now it's around the $7 to $10 billion range. From where he started it in 2012 to now, even if you take out that $50 billion plus, it's a remarkable achievement in itself. But even still, getting to that stage, reflecting on his early stage where he was talking about, for about 3 to 4 years, every day he would have 3 to 4 conversations about raising money. Imagine doing that for 3 to 4 years. I get exhausted having 3 to 4 conversations about raising money for ACG. So to do that every day to make sure the business is just running is crazy. And then still to do all of that, after 7 years, the business gets to 50 billion and then 7, and then you're fired from the company that you founded, even though he's going to be chair and he's still got substantial shares, etc. It's still an amazing lesson. And I think for me, the take home is at whichever stage you think you've got the business to, unless you're intentionally taking a step back, you always need to continue taking yourself on this development journey and ensuring your performance keeps up with how the growth of the company is. And that could mean hiring the right people or the wrong people, but you take a wrong turn at any point, nothing is guaranteed. And if you're not willing to invest all your time and energy to continue improving yourself and the company, then you're better off just stepping back and chilling. But yeah, it's a remarkable journey. I think it'll be a challenging for him, but a lot of lessons for a lot of people looking at that if they're looking to start their own venture or maybe going through a similar process now.
Shawal, I think what you mentioned was so good. Like, but the question is, based on our egos, how do you know when it's the right time to take a step back? Because it happened. Look at Steve Jobs, right? We've seen it where he got fired from his company as well. But it's the hardest thing to let go of your baby and look at yourself in the mirror and say, maybe I'm not the right person to take it to the next stage. So I think it's tough is everything you said is completely true. It's just, it's a tough thing to say, hey, I'm not good enough or I can't be good enough. Let me hire the right person.
But maybe that goes to the great question that P raised, the Ray Dalio perspective of how am I right? And then getting people to challenge you on your assumptions. And that takes a lot of, as you said, you need to put your ego to one side.
It's an inside job because other founders would have got it right.
And it takes a lot of self-awareness to even recognize that you need the help.
For sure.
I think it's fair to say you've heard our views on Peleton, where it went wrong, what it can do to sort of maybe turn this around. Of course, these opinions are all our own. We are certainly not any shareholders or investors of Peleton to have any inside scoop. These are certainly our own views, and we certainly look forward to seeing how Peleton will turn this around. We believe they might have the right CEO to do this, so we look forward to their journey. And I think this will conclude this week's episode of episode 120. But as always, we hope you found it useful, insightful, and maybe even some knowledge or education that you weren't aware of what's going on with Peleton. So please, if you have any feedback for us, you can find us on Instagram at Take Flight Podcast, or you can email us at takeflightpodcast@gmail.com. And until next week's Take Flight Takeaway, episode 121, stay safe and stay well. God bless.
Take off.